Good morning and welcome to the early bird. And here we're looking at the S&P 500 on a 30-minute chart, which is up here. And as you know, that uh, with most indices, they've been struggling over the last week or so up here at their old highs in some cases, but very close in others. Or even above in some. But this weakness that we've seen through here, which has really been not on high selling volume, but on no volume. So tops and bottoms have turning points on extreme volume or no volume at all, because obviously you need volume to push the price up. So we're seeing weakness there. What's sort of not really quite clear is the structure coming up through here in terms of Elliott counts. It could be the top of wave one here, or it could be the top of the third wave here. We're just a little bit unsure about that, but we're sure that that there has been weakness all through here, and we're just, because it hasn't pushed up now. Sellers are aware that there's no sort of buying there, so to speak, so selling occurs. This is what could occur here in this structure here at 1300 on the S&P 500, and of course the other markets would go be in sort of suit there as well. So what sort of thinking is that looking at 5 waves down in terms of down for one here, back for two here, and then coming in for wave three down through here, and wave three will be of 5 smaller waves. So it does appear that we've already got 5 waves down through here in terms of down for one, back for two, down for three, back for four, and down for five here. So that would come back up for wave two there. So it would be down for wave one, back for wave two, and then down for wave three there. So this is a possibility here in having these larger 5 waves here. And then moving back up from that point there. So that's one scenario. The other scenario is that that we do find support in this region here and push up from here. But I'm finding it a bit hard to sort of grasp that looking at this particular correction come through here. If this high here was the high here, then we would have an A and a B and a C there. So we're slipping under the resistance here in terms of the old trend line coming through here. They just tend to sort of play out through here. So that's coming through there. So certainly sort of weakness coming in through there and in through the Dow Jones as well. It's held up a little bit better. But once again, I know this is messy, but what I wanted to point out here is that the same old story that I've been sort of pitching really is that, there's been a nice sort of trend up through here, and now you can see that it's struggling, it's creeping, it's got overlapping wave structures there. There's no volume to drive it up, it's on sort of low volume. How big is the correction going to be is the point in question. Now this is the fourth wave of one lesser degree here, so it can come back to 12.2 there. Sure, there's some supports up here. We understood that we had our trigger points up here. We understood that the 12,350 is an important point for us. If the market moves through that, well, then we've got ourselves a problem. Yes, sure, it spiked through here twice before, but it's recovered really quickly. So it's still intact, but these sorts of things here can point to the downside because they're testing in amongst the support there. The 12,300 here is quite important because it is a group, the top of group one, and it hasn't really been tested for support there. So look, there's weakness there. We just don't know how big this is going to be. But once again, this can be this wave here is quite high, so this can be the A, the B, and the C now. Even though that this here was the same scenario before. Look, we just don't know. But any further weakness here, and we need to take action. And we've already been considering that point there. Right, this is the same through to the FTSE as well. You can see that the FTSE's been struggling up through here, and that's likely to follow the S&P 500. Each trend has a beginning, a middle, and an end, and it's certainly got that ending sort of pattern there in terms of displaying overlapping wave structures and weakness there. There's lots of support here at the 6,000. The next one's at the 5.9, of course. But this is also the top of group one here. So we've got 6,000, got 10, 20, and 30. And currently it's got support here. If it slips under the 20 here, then it will become part of the 6,000. So that midpoint in group one would be extremely important. So we'll see how we go with that. Support back up on the 50 here, and of course the midpoint here, then you'd go along from that point there. Now, our local market, that's the SPY, and that's at 5,000 now, but I'll just come back to that. It's a little bit clearer on the ASX 200 here. Okay. So I've squashed this up a little bit in here, but just to try and get most of it in there. So from the 4,500 here, the midpoint between 4 and 5, we're looking for a structure to go up, and we're looking for 5 waves to go up, and we're looking at that in terms of up for wave 1 here, back for wave 2 here, and then we're looking at the third wave coming up through here. We're looking at that in 5 waves. So in 5 waves, there would be 5 waves in this little one here for 1, back for 2. I think I've got this right here for 3, and back for 4 here, and then we're still going up for 5 through here, but today will be a bit softer there on that. But it does appear that this has still got further to push to the upside there in terms of up for 1, back for 2, and then in the third wave here, pushing up through here in terms of up for 1 and back for 2. This is still pushing up through here, but what you do see here as well is that you see this trend here is diminishing. So this trend here is fine. This one here is a bit shorter, and this one here is shorter still. So we can see that basically the pattern is getting smaller and smaller. So there will be recourse here at this group 2 within here, and checking for support just below the 950 here. But overall, we're looking for a third wave up here, a fourth wave, and then a fifth wave to go further up there. But being at the 5,000 here, we're going to see, the arrival, the reaction, the support, then the first high above the level, and so forth. So this is where we are here, and it's not going to be that sort of easy to navigate through this. However, it's also going to be tricky to trade through this as well. But we're just expecting, if you go back in history at 5,000 and have a look at how it dealt with this level, then you'll get some sort of idea of what we're sort of up against. And you'll see the stocks, at this area as well here. We're seeing BHP in the US at 100. We'll see our local market, the BHP at 50. Look at, this is CBA here. CBA is at 53 here, and this is important because 53 is the the minor group level here, but this is minor group 1 here. So 51, 52, and 53 act as group 1 here. So what we'll be looking for here is that we'll expect a correction through here, and we're seeing that correction now, because when we came up to this point here, was to take some profit here. So this is the arrival, this is the support, this is creating the first high above the level, and now we should see the correction unfold through this point here before we go any higher. So what we're trying to be working out with the banks is we're trying to work out the 5-wave structure that's heading up in this way, but it would be something like a bit more like this. That would be to there. That could still go up there further, that's fine. There, something like that. And in this long third wave here, there will be 5 waves in that as well. So we're looking for 5 waves. We're looking for a correction here, and then a move off from that. There is so many stocks have got runs up like this. CCL, was that one? Nope. CSL, right. Yeah, so you can see this here. The interesting thing about this here is that you can see the strong third wave in the middle here. So this would be, there'll be a wave one in here, wave two. There could be the third wave in terms of 1, 2, 3, 4, 5 for the top of the third, a fourth wave, a fifth wave, and then the correction. Okay, so it can be something pretty much like this, really. A motive wave. An impulse wave is 1, 2, 3, 4, 5. A motive wave is with the ABC correction here. Point being is that either this here or this here very shortly will be the top of this market here, and we'll have our corrections from that point. So it could be from here, it could be from here. You know, it's when you start getting if we go back to CBA, just as an example for many other stocks as well, when you start getting this bar here where it opens high and closes lower, there's weakness in the market. Now, normally they're quite severe. We've had one here, which are not being that severe, but they can be as severe as this. That was a dividend there, of course. They can be severe as this one, this one. So normally when you see them in an uptrend, then you need to take that warning, you know. That's all. Just pointing out that they can be severe, and they need to be noted. Yeah. All right. So anyway, back on the case, the futures market. Okay. Now, the thing that looking at with the futures market is lining the corrections up that the indices are having them and the commodities are having them. So this one here is copper. So we've reached the 450 here the other day, and now we'll see the correction across this here. Now it could be as simple as an A and a B and a C, and then we push higher from that. The other scenario would be an A wave, a B wave, and a C wave. Now, if this has taken a day and a half or 2 days, then this B wave is going to take like 2 days, and then the C wave would probably take 3 days. So we basically got about a week here to spend before this is over. Now, this is important because that's what these local stocks would have. So when we're looking at CBA here, we're looking at like 1 week of corrections here, which is pretty short term for this, I'd have to say, but also the indices as well. So we're just trying to line them all up. The same with oil. So oil, we've got little 5-wave structure up through here, and we're seeing the correction across the 110 here, which is the minor level. These subgroup 1 here into 13 here. So 1, 2, and 3 subgroups. So we can expect an A and a B and a C wave through here. So these types of patterns here that we're seeing in commodities, we're going to see in stock, and we're going to see in the indices. So that's what we're looking at. I've put it down as sort of 1 week. It could be earlier, it could be later. It's not that matter. It's just to give us some sort of perspective and feeling about the situation. So, but that's what we're looking at. And this would also be the same with the Australian dollar as well. So when we're looking at the FX market, and we're looking at our local market here, we can see that 105 here is a midpoint between $1 and $1.10, and 5 is the second strongest number. So we've had the arrival, we've had the first support, then when normally the 5th wave creates the first high above the level, and then we see the correction. Now the correction in this terms here, this can come all the way back down to this 4th wave of 1 lesser degree here. So normally I find the distance that it travels above was the distance it will travel below, and this 5 here will become the central pivot and balance line within the correction. So we can see like an A, a B, and a C wave across here, and then finding support and moving up from that. So all of the markets seem to be lining up a little bit, and that will give us a bit of a guide stone, and that helps because it will help you what to do with your own positions in the market and setting stops and those sorts of things. The US dollar index is down at 75. The correction that it's doing at the moment here, it will correct this move that it's had coming down through here. Yeah, but once it's finished, it should push on further down. This all looks quite corrective here for the time being. Let's just see if it finds support on top of the 75.30. Yeah, actually gets up there and comes back and retests it and finds support, and then moves up from that point. Then we've got a problem. But this should, the 30, the group 1 here, the 10, 20 and 30 job is to trap it in here. Once that's the case, then we'll see it work lower and eventually find 75 as resistance. Once it finds the 75 as resistance, then it should push further down and our markets will push further up. But the flip side of this, of course, like I mentioned, is this moving up and finding support on 75.30, the top of group 1, and a retested support. It's okay for it to trade above it because normally they'll pull back to the fourth wave of 1 lesser degree, wherever that is. Yeah, it could be in here somewhere, but actually finding support here would be the situation there. So we can look for 5 waves up, 1, 2, 3, 4, 5, but finding support on here would be the other side of the coin. So, but all the same, trend is down, bear market rally as a corrective rally, and moving further down. It will just take its time moving through this here. Once 75 becomes resistance, as retested resistance and fails, it will move quite rapidly between 5 and 3, 75 and 73 there. And in return for that, we'll see the euro push up from that point, and our market off the 105 at that point as well. So the euro here, so it's still pushing up through here. We're expecting a wave 4 to come back in around the 144 here, perhaps a little bit sort of lower there, but certainly staying within the trend lines, moving up through there. Once this wave 4 is complete through here, we should see it push higher through there. But see our charts on that there, and use Elliott for the direction, but use the trading levels as support and resistance to actually place trades, place stops, and place targets. So it's trading support and resistance is the go, but the Elliott can help, and pattern recognition of actually understanding what's occurring through here is important as well. And like I mentioned, all these 1-2s here are the beginning of a trend. So a trend's got a beginning, it's got a middle, and it's got an end. And the end will be the same as the beginning. It will slow down and start sort of creeping along a little bit. The middle is where most people get involved in it, and it expands out and so forth. Yeah, so this would have to be about the middle in here. That would be the middle of the whole trend as it stands. So we've still got all this here tacked on to the end up here to go. So still a fair way up here, and this is all a retest of the 150 up here. Alrighty, so that's it in a bit of a nutshell. And on our local market, we'll be seeing something of this nature here. We can see this is weakening through here, selling through here, but we'll see reactions up here. This is just a bit of a wild guess here, all of this. But when we're looking on stocks, like I mentioned, we've had a nice run up on stock, and we need to see a corrective pattern occur at some stage, and the 53 is where it's likely to unfold. Now, if the commodities have shallow corrections, then we'll see shallow corrections across here. If it's not shallow, then we'll see something like that, and sort of allowing for something like this to occur here. So we need to navigate through here, and I suggest that if it does correct in these sorts of patterns here, then don't worry about trading too much. Just keep positions smaller, and we'll wait for the correction to finish, and we'll take it from there. Now, if this is going to correct through here, this pattern here, this ABC here, will be a pattern like this. It will be a 5-wave structure to there, whoops, and a 3-wave pattern to there, and then a 5-wave pattern to there. So what we're looking at is we're looking for the 5th wave of this C wave here. And once we've got that, we'll know where support is, and then we'll start looking to the upside from that point. May not be that sort of simple, but that's what we'll be sort of looking at. And this is where we'll be getting in through here. So look, it could get quite choppy in through here. And I'm just using this as an example for most stocks as well, and resources. So yeah, alrighty, that's it. So alrighty, good morning and good luck.